I have a video today that I know you are gonna absolutely love. Today we're talking about something everybody wants to know. What are some stocks to buy next? I'm gonna share some of my opinions on some specific stocks out there that I think are really interesting currently, and some sectors as well. A lot of people are asking this right now. Figure let's go ahead and get a video done about this, okay? And the reason a lot of people are asking is because, let's be honest, the market has come back a lot, okay? The Dow Jones Industrial Average is pushing up against 28,000 now. It's getting pretty dang close, right? So we're only, what, maybe, 1,400 points away now from an all-time high in the Dow Jones Industrial Average. Meanwhile, S&P 500 is already back to record highs. Think about that. That's extraordinary, right? From, 2,200 at the lows just a few months ago to now 3,400. A lot of people are seeing this, and let's be honest, there aren't nearly as many good deals in the stock market as there were in March and April. You were buying stocks in March and April, it was like shooting fish in a barrel. It was very easy, okay? Now, not as easy. NASDAQ is the highest it's ever been. It's actually at record highs like right now, okay? Incredible, well over 11,000 for the NASDAQ. Extraordinary. A lot of big tech, let's be honest, everybody loves the big tech companies, right? A lot of them are what? At all-time highs right now. Look at Apple's chart, for instance. This stock's pretty much at an all-time high right now. So look at Google McDougal, right around an all-time high right now. Mr. Softy, Microsoft, right? All-time high right now. Amazon right around an all-time high right now. Look at Tesla, everybody's favorite stock, right? To own out there, beginners in the stock market, everybody loves to own some Tesla stock. Tesla stock is right around an all-time high right now, right? It's maybe like 100 points away from an all-time high. I think it got over 1,700 one specific day, but 1,650, this is like the second or third best close in the history of Tesla stock, right? Even stocks I talk about that aren't mainstream stocks, right? Like a Planet 13, that stock was $1 something, what, a month, 2 months ago, and now it's $3.46, and everybody's seeing all this and seeing all these stocks climb, a beautiful thing that is stock price appreciation, and folks are saying, what the heck do I buy next in this whole situation? So 3 big things I want to get into in this video. I want to talk about big tech. I want to talk about if there's any opportunities in those big tech names, okay? I'm talking Apple, Microsoft, Google, Facebook, Amazon. Any opportunities there? Second thing we'll get into in this video is around growth stocks, okay? And if there are any opportunities with some growth stocks, I might change some perspectives when it comes to some of these high-flying companies that are growth beasts, okay? And the third thing we'll discuss in this video here today is some slept-on sectors, in my opinion, where there's a lot of stocks out there that, haven't risen the way the market's risen, okay? Let's just put it that way. This market's been driven by a lot of tech-related names tearing it up, and there's some sectors out there that have been slept on that I think people, might wake up to soon, okay? So I hope you guys enjoy this. As always, if you don't mind, smash me a thumbs up button. This is a very in-depth video. I got a lot of slides planned for you. So if you don't mind, that helps out the channel in a massive, massive way. And also, if you're looking to scale your stock market portfolio to 6 figures, 7 figures plus, go ahead and check out the first link in the description on there. That will allow you to apply and hopefully get on a phone call with somebody high up from my team that we can talk to you about a product and service we have in the market that can help you scale your stock market portfolio. First link in the description, okay? Big tech. Let's get started with big tech and we'll go from there, okay? So we're talking Facebook, Microsoft, Amazon, Apple, Google. Any opportunities in any of these stocks, okay? Well, first off, if I'm looking at any of these stocks, which remember, right, all these stocks are pretty much right around all-time highs here today, literally, okay, right around, like very, very close, right? So if I'm looking at big tech, the first thing I want companies that are still have really, really nice growth, like double-digit percentage revenue growth for years to go in the future, okay? That takes Microsoft and Apple out of it, okay? I love Microsoft, I love Apple, but let's be honest, those two companies are not going to grow 10% plus revenues on the top line for years and years to go in the future, in my personal opinion, okay? Facebook, Amazon, Google absolutely will. Apple, Microsoft, they might have a really good year here and there, but in my opinion, they're just not going to be consistently growing top line 10% plus. Facebook, Amazon, Google will, without a doubt, in my opinion, for years and years to go in the future. So if I'm looking at these, I got to kind of look from a lens of those 3, okay? Now, if we look at AmazingZone, right? AmazingZone is an amazing company. That's why I call it AmazingZone, okay? But that valuation, let's be quite honest with ourselves, is extremely rich, even for an amazing growth company like Amazing's right? I mean, you're looking at a trailing P of 121, you're looking at a forward P of 108, okay? Once again, Amazon's a beautiful business model. They got they got many, very powerful businesses, but their main obviously is Amazon.com and Amazon Web Services. Those are two big giants, along with a lot of smaller giants inside their business. But at the end of the day, that's a really rich valuation on a company that is already gargantuan. We're talking about almost a $1.6 trillion market cap. This company will get bigger, but a lot of that growth is priced in when you're talking about 108 forward P on a company that's been around for what, 25 years now or so? Amazon's been around, so that one, I'm not so sure, okay? Google McDougal, okay? Google McDougal has a $1 trillion market cap on it. It has a 35 forward P, 33 trailing P. When I look at Google McDougal, I see some decent opportunity because the flat out honest truth is Google will continue to grow, right? We know Google from Google search, right? Google search is the search giant of the world, right? One of the most profitable business models in the world, right? They obviously own the platform you're watching this video on right now, which is YouTube, which is just, if YouTube was a standalone company, it'd be one of the biggest companies in the world. Then they own Android, and they own a ton of other, products, services out there they provide in the world, including cloud products and things like that. So when you look at Google, hey, I actually think it's an opportunity. Is it the cheapest stock in the world to buy? Absolutely not. But at the end of the day, is Google stock higher in 5 years from now than it is today? In my opinion, without question, Google stock is higher in 5 years than it is today, okay? So yeah, Google, I would say there's actually still some decent opportunity there. The FB, we look at the FB, right? The FB is the most interesting of big tech, in my personal opinion. You're looking at a stock with, let's say, around a 33 forward P. That number is probably high. I think they're gonna, be way more profitable than what Wall Street thinks. But it's around a 33. It's a company that will grow massively in future years. Look at the revenue growth expected next year. Around 24% revenue growth expected next year. And don't be surprised if they beat that number, okay? And so at the end of the day, the FB looks dang attractive. The FB owns not just Facebook platform, they own Facebook Messenger, they own Instagram, they own WhatsApp, and they own Oculus, okay? So just a beast of a business model and a beast of a balance sheet. So if I'm looking at big tech, I actually see opportunities in Google and Facebook. The other three, I love those companies. I just don't think there's as much opportunity because those stocks have ran so much. And, in Apple and Microsoft is limited growth. In Amazon's case, there's still big growth, but that valuation is just so rich. In my opinion, kind of Google and the FB, they kind of represent just that perfect balance of being beast companies, insanely profitable, very nice growth going in the future for them, and valuations that are somewhat realistic, versus, something like an Amazon, obviously, that's got a forward P well over 100, okay? So that's big tech, and that's my opinion on big tech, okay? Now let's talk about some growth stocks, okay, which is a little fun. I know a lot of you guys love the growth stocks, okay? So first off, I want to tell you a little secret, okay? Let me tell you guys a little secret, okay? Growth stocks are meant to grow a lot, okay? A great growth stock should see its stock price appreciate massively over years and years and years, okay? That's why it is a growth stock. If you're talking about a company that's going to grow revenues 10%, 20%, 30%, 40%, 50% plus a year consistently, this stock should appreciate a lot. The stock price should go up massively, okay? This is not a Coca-Cola stock, okay? Coca-Cola is not going to magically double, and McDonald's isn't going to magically double, okay? And Procter & Gamble, that's not just going to magically double, okay? But where we come into some trouble is sometimes people see some of these growth stocks double. Let's look at a growth stock that I've been talking about more than any other recently, which is Planet 13, right? Everybody thinks this stock is way too expensive now because the stock price has doubled, right? It went from a $240, $260, $270 million market cap to now it's over $400 million market cap. And everybody's like, oh my gosh, basically the market cap, the stock price, everything has doubled up. And so now the stock is way too expensive. Well, with a great growth company, that's what should happen. The stock price should appreciate, okay? It should be doubling and hopefully doubling and doubling and doubling over in future years. Why? Because the company is expected to be one of the fastest growing companies in the entire stock market next year, okay? And in future years as well. Next year, the company is expected to grow revenues over 100%. I track hundreds and hundreds of stocks. I do not know of another company in the entire world, as far as public companies that is, that will grow revenues over 100% next year. And Planet 13 should easily grow triple digits next year. That's just growth on a whole other level, okay? So of course, the stock price is gonna go up a lot. It's natural. It's a growth stock, okay? This is what should happen. This isn't Coca-Cola, this isn't Procter & Gamble, this isn't McDonald's. Don't compare it to those companies and be like, well, no, they can't. It's apples and oranges, okay? Tesla, right? There's a stock that's $1,650 here today, okay? And everybody says this stock is massively overpriced, or I don't want to say everybody, but a lot of people say it's massively, mostly people that don't own the stock, okay? It's massively overpriced and it shouldn't be trading at that price and those sorts of things, okay? But the reason most people are saying that is because it's gone up so much over the past year, right? It was 200, you go back a year ago or so, it was $200 a share. Now it's 1,600, so people are like, it shouldn't be that. But keep in mind with Tesla, right? This stock did nothing for almost 5 years. Like just pull up a 5-year chart for Tesla and you're gonna find the stock price did a whole lot of nothing, okay? Which is extraordinary because you just think about the changes that happened in Tesla's business model over those 5 years. Think about the technology this company launched over those 5 years and all the progress that company made over 5 years. And the stock price did nothing for 5 years, okay? And so some folks look at this and they're like, look at how much the stock price gone up. It's like, that's natural. The stock price did nothing, and this company has amazing tech and they're going after amazing things. And when you look at the growth that's expected for this company, right? They're expected to grow 20% plus during a once in 100 year, Roni Rona event. That's extraordinary. That's extraordinary if they put up that type of number, right? Next year, analysts have this company growing 37%. Extremely strong growth. Let's be very clear about that. But we've heard Elon Musk go on record that he thinks the company can grow at 50% a year for like the next decade, he basically says, okay? I mean, imagine how large this company is going to be if you're talking about a compounded rate of return of 50% revenue growth year after year after year for a decade straight. In that sort of situation, we're talking about a company that will end up being probably the biggest revenue company in the entire world, bigger than even an Amazing Zone, even if Amazing Zone continues to grow like a growth beast, they are. And just think about that for a moment, okay? And so it's not about just like being like, well, the stock's gone up a lot lately. It should, okay? It's a growth stock. These companies are really exciting. They're doing massive things, and the stock price should appreciate in a real huge way, okay? You look at something like a Revolve stock, okay? There's a stock I hold, a RVLV, right? This is another one of those stocks that it's climbed a lot recently, okay? Let's be very clear about this. But it's a $1.5 billion market cap. That's really, really small. When you think about where this company's going and how they're the new age of like a Nordstrom / Macy's, and you think about like a lot of the traditional business models that have been hurt, in mall-based retail, the Dillards, the Macy's, JCPenney's, Forever 21, all those stores are, for the most part, most of them are going under, right? And so if you're shopping for clothing, then you're going to go somewhere else. And Revolve is that company that could be, let's call them the potential Amazon, but of clothing, okay? And especially the higher end clothing. Let's talk about clothing products over $50. That's really their specialty, okay? Not to say they don't care about those lower brackets, but that's really their specialty. Those orders of, that somebody will buy a $100 dress or a $200 dress or something like that, okay? And so when you look at this company, it's a company that could easily be a $5 billion plus market cap in the next 5 years. And it's $1.5 billion. So although the stock prices went up a lot recently, it still could potentially go up massively over the next several years because they have such a massive opportunity and the company executes so well. The management team is so forward looking with that company. It's absolutely amazing. So don't be surprised if that's, a $3 billion, $5 billion, $7 billion company down the road versus 1.5 today. And so when you just think about that, it's like, okay, 1.5 today and it could go to, 5 billion or so. Like, that valuation is a little compelling, right? Okay. So listen, guys. Just because it went up, and when I say it went up, I'm talking about a stock price, okay? It doesn't mean it's not a buy. Just simply put, just because a stock price went up a bunch, whether it's in a few months' time or a year time or whatever, doesn't mean it's not a buy. You gotta really look at the valuations of these companies. If we look at Tesla, for example, right, in the public count, we have 150 shares of Tesla. Cost base is 227. We're up 213,000 on that. Let's dig a little deeper. Let me show you details around my purchase around Tesla, because I didn't just buy 150 shares all at one price, okay? Look at how many different times I bought Tesla shares in that public account. I bought 27 shares at 272. I bought 10 shares at 236, 12 shares at 234, 11 shares at 254, 12 shares at 226, 17 shares at 219, 29 shares at $196, 15 shares at $188. Woo-wee! 17 shares at $223. Look at that. I purchased that stock so many different times. Different shares, different prices. And it wasn't like I looked at that stock and I said, oh man, it's higher than I bought it last time. Like, heck, I bought it at 234. Then I buy it, a couple days later for 254. Because at the end of the day, I'm just like, this stock has massive potential. And so why not buy some more shares? Just because it's $20 a share more expensive than it was 2 days ago doesn't mean I shouldn't buy some more shares here today, because guess what? I thought this stock had the potential to be a $2,000, $3,000 plus stock in the future. And if I'm thinking that way, right? Does it really matter if I'm buying the stock at 230, 250, 270, 180? Of course not. I mean, I would love to get it the cheapest possible, but at the end of the day, it's all gravy in the end. Because if this stock's $1,000, $2,000, $3,000 plus dollars in the future, what does it matter? And here today, obviously, the stock's $1,600. So it really didn't matter what price I was buying it at that time. It was all gravy in the end, simply put. And the same thing goes for today. I mean, if you really think Tesla's going to be a $3,000 or $4,000 stock, does it matter if you buy a $1,400, $1,500, $1,600, $1,700? Of course not. It just matters that you buy, and then if you think the stock's going to that place over time. In Planet 13's case, I own the stock in 4 different stock market accounts with cost bases that are dramatically higher than other accounts. This one, $1.25 cost basis. This one, $1.47. So first off, this is already, if you run the percentages on buying at $1.25 versus $1.47, we're talking about a massive difference in percentages. But at the same time, I looked at the stock, I'm like, this is probably going to be a $10 plus stock in the future. So does it matter if I bought it at $1.25 or $1.47? No, it just matters that I'm buying, okay? This account, look at this one, $1.69. We're talking about that's a ridiculous percentage increase versus $1.25. And this is my highest one here, $1.70 cost basis on this stock, right? When the first shares I bought was $1.25, we're talking about massive, gargantuan difference in cost basis there. But at the end of the day, when it comes to great growth stocks, it doesn't really matter the specific price you get in. Value stocks, different story. You really got to be very specific about those prices. But when it comes to great growth stocks, it's all gravy, okay? Let me tell you what has cost me more money in the stock market the past 12 years than anything else. And this was, specifically my first 10 years. In the last year or two, I really kind of got out of this frame of mind, thank goodness, finally. But the first 10 years in the stock market, this cost me more money than anything, okay? I'd research a stock, look into it fully, I'd buy that stock, and it would go up 5%, 10%, 15% from my bought. And I would say, no, I'm not buying anymore. I'm refusing to buy. When all along in my head, I understood that this stock has a opportunity to 50%, 100%, go up 150%, 200% in the future. And I wouldn't buy just because it went up 5, 10, 15%. Refused to buy, and it would go up more and more and more. Everything would play out just as I thought it would play out. And I never bought more. Because why? That's just stupid, because it went up 5%, 10%, 15%. If I expect the stock to double up or more than double up in future years, why was I not willing to pay 10% more? That cost me so much money in my first 10 years of basically being in the stock market. Like I said, it literally in the past year or two, that's when my mindset really started changing. I realized how dumb that strategy truly was to not buy a stock just because it went up 5% or 10% or something like that. At the end of the day, if it's, especially when you're talking about growth stocks, man, you got to take advantage. You know, if we're talking about waste management, be very specific with pricing. We're talking about Pepsi stock, be very specific with pricing. If we're talking about Walmart stock, be very specific with pricing. But with great growth companies, it doesn't work like that, okay? So we've covered big tech, we've covered growth stocks, okay? Now let me tell you about some slept on sectors, in my opinion, some opportunities out there and some different industries, okay? The restaurant industry. There are a lot of public companies that are in the restaurant industry, okay? Now, not all of these stocks are buys, I can tell you that, but there's definitely some opportunities. If you got a little bit of a risk, appetite for yourself, you might have an appetite, and no pun intended, for some of these restaurant stocks, okay? Because some of these restaurant stocks are still heavily beaten down, right? Because a lot of them have had to close their indoor dining, and a lot of those business models just got absolutely destroyed in March and April and May, okay? And they, started to come back to life, but the flat out honest truth is a lot of these stocks are still down 30%, 40%, some 50% plus from their highs. And if you look at the balance sheets of some of these companies, a lot of them have a very good opportunity to, basically stay alive and thrive in 2021, 2022, and moving into future years, okay? Obviously, you guys, if you follow me closely, you know my number one play in the restaurant industry, the number one, ROI opportunity I see out there, is Cheesecake Factory. That's the number one I personally see. I own 800 shares. I think this is in the public account. And then I also own another account, which is this one here. This is, I think, my main private account, and I own over $38,000 in that account. And so far, we're doing pretty good on it. I think we'll do even better in the future. And when it comes to some of these beaten down restaurant stocks, something like Cheesecake Factory, it's going to make it through this mess, in my opinion. It's going to easily make it through this mess. And at the end of the day, this is likely going to be a 35, if not $40+ stock, within the next couple years. And so when I look at that, I'm just like, the ROI is too dang attractive to just not look at, essentially. And so they're not the only ones in the restaurant space. There's some other opportunities out there for you guys. I think that's just an interesting sector that hasn't come back, because ultimately the business models haven't come back yet. And so Wall Street wants to see a little more proof, and then, they'll start jumping back in those stocks, okay? CCL, I got to actually say, the cruise operators, some interesting values here. At the end of the day, these companies are more than likely going to make it through. They've made it through the toughest spot, and cruising should start at the end of this year and moving into 2021. And from what we've heard from these cruise operators, is demand for 2021 cruising is actually extremely high, okay? Guess what? Newsflash. People that love to go on cruises still love to go on cruises, okay? And we've heard this from almost every single cruise operator out there. 2021 demand is extremely high. And like I said, it's not just for Carnival. If you look at what the other guys have said out there, from Royal Caribbean and Norwegian, they look like, demand is just really strong for 2021 as far as people booking cruises in the future. So if I look at something like CCL, it's a stock that is heavily beaten down still. Yeah, it's not $8 like it was at the lows, okay? But the flat out honest truth is this is a stock that was usually, what, $40 plus, right? When it came to Carnival Cruise Line, this was like a $40, $50, $60 stock in the past. It's $15 here today. It's still a dang, cheap company. And I get questions sometimes where people are like, well, would you rather buy like the cruise operators like a CCL or a Royal Caribbean or something like that? Or what about the airline companies like a Southwest Airlines or Delta or American Airlines or something like that? And so let me put up this slide I made for you guys, okay? This is why I love the cruise companies a lot more than the airline companies, okay? Cruise company, you know how many different ways these guys make money? It's ridiculous, okay? First, they're gonna sell you a ticket just to get on board the ship, okay? Then once you get on board, you're probably gonna wanna party a bit. You're probably gonna wanna drink, right? So that any, alcohol you're gonna consume on board, you're gonna pay for that out of pocket, okay? Some cruises are like, I guess you could say like it's included in it, but that's not most of them. And if you want to get on one of those, the ticket price is usually extremely expensive, okay? So you're gonna go to the bar, you're gonna have drinks, you're paying for that out of pocket, okay? If you wanna get the better food and eat at the better restaurants, okay, you gotta pay for that out of pocket. You can get like buffet food, basically complimentary, but any of the upgraded foods, you're coming out of pocket for that, okay? There are clothes for sale on board, there are jewelry on board, all those sorts of things. I mean, anybody that's been on a cruise that's watching this video, leave me a comment down there, okay? You guys know what it's like being on these big cruise ships. There's so many different ways you end up spending money, right? They have spas on board, so all of a sudden you want to get your nails done or your hair done, you want to get a massage, you want to get a facial, something like that. That's a big money-making operation for them on board, okay? They have gaming on board, and I'm not just talking about arcades, I'm talking about adult arcades as well, okay? Casinos on board, all those sorts of things. And there's more than that, but that's just kind of like the main things they're making money from once you get on board that ship. Versus an airline company, right? They sell you their ticket, and they might make some money off you on baggage, right? I can tell you, I don't think I've ever paid for baggage in my life flying anywhere because I don't take a lot of baggage with me when I fly. So if I book a flight on Southwest or whoever, okay, they make money off the ticket, and that's it. And that's what really differentiates the business models, in my opinion, what makes me a lot more attracted to the cruise operators versus the airline companies, because as a cruise operators, man, they got so many different ways to make money. It's crazy, okay? Airline company, it's like tickets, that's it, and hope maybe you check some more baggage or something like that, okay? So yeah, cruise companies, I think there's actually some opportunity there, okay? Next one up here, mall-based strong brands. There's actually some opportunity here, and these are basically companies that are in the malls, okay? But they've been beaten down because they're just thrown in the category of mall-based retail. But the fact is, these particular brands are extremely strong. And I'm going to mention a few specific ones here, but these aren't the only ones, okay? But there's been a lot that have been heavily beaten down. First one up here is Foot Locker, ticker symbol FL. I think there's a lot of opportunity anytime the stock is under $30 a share specifically, okay? This stock's going to 40 plus again in the future years, in my personal opinion, okay? It's too strong of a brand. It doesn't matter. Foot Locker, man, they're in with, you know, the biggest players, specifically Nike, and they just do a great job with that business, and they invest in new platforms that are coming up, and you really, you know, once you really do your research in this company, you're going to realize they actually own a lot more than just Foot Locker stores. They own a lot of other massive brands and growing brands, and the management team is just really dang good at this company, and so they get lumped into that mall-based retailer when the fact is they're going to be around long after malls or, you know, traditional malls or whatever are around, okay? Tapestry, TPR, same exact situation. They get lumped in with everybody else that's in the mall-based retail. Tapestry owns amazing brands that have been around. You know, some of these brands have been around for 50 years, 100 years, right? They own Coach, they own Kate Spade, they own Stuart Weitzman. Some phenomenal brands that, honestly, you know, people shop online for these brands, okay? If you want a Coach, you know, purse or Coach bag, handbag, whatever, or Coach wallet, you go to Coach.com and you buy it right there. It's not like you have to be in the mall and happen to walk by a store and be like, oh, I got to go buy a $300 handbag now or something like that, or I got to go buy a, you know, $250 pair of high heels from Stuart Weitzman or something like that. It's not the way it works. So Tapestry's been lumped in with all these other mall-based retailers, and the fact is this company is likely going to be a $30 plus stock in future years once they, you know, get back on their feet. Let's just put it that way, okay? No pun intended. Capri Holdings, not my favorite company in the world, but I can tell you there's likely opportunity in this one. Capri, they own Michael Kors, they own Jimmy Choo, and they own Versace, okay? The reason it's not my favorite company, by the way, is just because I thought they way overpaid for Versace when they brought Versace, you know, a few years ago, okay? But at the end of the day, Capri Holdings, ticker symbol CPRI, you know, they're going to likely make it through this mess, and likely it's going to be a much higher stock in future years than it is today. And another one of those that owns some phenomenal brands, but, you know, everybody's just like doesn't want to own it right now on Wall Street because it's a quote-unquote mall-based retailer, which I think is just absolutely ridiculous. Alrighty, so we've talked a little bit about big tech stocks, right? We've talked about growth stocks. We've talked about some value stocks that are some, you know, interesting valuations out there that should see good price appreciation in future years. But we haven't talked about dividends, okay? Dividends, okay? Banks, the banks, okay? Not the sexiest stocks in the world, believe me, okay? These aren't the type of stocks that you're going to double up your money and double up your money in. But the banks, if you're looking for some good dividend money, I actually think the banks are pretty attractive here, okay? JP Morgan Chase, over a 3.5% yield on the stock. Bank of America, 2.7% yield on the stock. Remember, these banks are basically backed by the federal government, okay? It's just facts. You know, all these big banks, they're just not going to let them fail because they're just too big and they just cause too much damage out there, okay? US Bancorp, look at this one, 4.5% dividend yield on US Bancorp. When you look at these big banks, it's dang attractive when you look at these dividend yields, and you'll likely probably get some price appreciation over time in these names as well. And the fact is, you look at, savings account interest rates, 0.06%. Man, I would much rather put my money in a US bank stock and get that 4.5% yield and take my risk with the stock than put the money in a savings account where I get literally nothing on it. I mean, that's just ridiculous, okay? So if you're looking for dividend plays, I think the banks are actually some pretty intriguing prices here, okay? Next up, we talked a little bit about travel earlier, and we talked about cruise companies, airlines, things like that. What about something like a Wynn Resorts? I think Wynn Resorts is actually an intriguing price. Anytime it's under 100, it's pretty intriguing. But what I'm seeing is kind of a bit of a, things are getting better for Wynn. Let's just put it that way, and a lot better. I mean, this business model was devastated. They had to be forced to be closed in Macau. They had to be forced to be closed in my city I live in, Vegas, for months, right? The business is getting back on their feet again, which is phenomenal news, okay? I live in Vegas. I can tell you, I go down the strip, okay? Go down there, see how business is, and weekends are actually getting pretty strong. I will say that. Now, is it back to normal? No. But I will say, Thursday evens are getting, pretty decent. But Fridays, Saturdays, and Sundays are actually pretty dang busy on the strip now. Their business is really lacking is weekdays still, okay? Monday, Tuesday, Wednesday are really, really weak because those are usually the days when we have a lot of, companies come in town and like a lot of convention business and things like that. So that business is still extremely slow and probably will be extremely slow all the way until, probably almost 2022. But the fact is weekends are getting stronger and stronger, and I'm noticing more and more people down there, which is definitely good news, okay? As well as when I go by the VIP rooms, at the Wynn, those places aren't ghost towns. It's actually a decent amount of people in there because guess what? There's a lot of people with still a lot of money that want to go do something, and some of those people love to go get in some gaming action, okay? But it's not just about Vegas. The biggest thing for Wynn is the Macau market, okay? By far and away, it's just way bigger for them than Vegas, okay? And things are starting to finally move in the right direction in regards to China and basically kind of taking some of the reins off and letting some more folks start to go to Macau because Macau numbers have been down like 90% plus for months and months now, okay? But it's because China has been so restrictive in who can even go to Macau. But it looks like things are gonna start easing up into the fall time. That's phenomenal news, and hopefully China, eases back even a little bit more, as long as, hopefully no Ronas go crazy or anything like that. And then hopefully as 2021 rolls on, Macau will get stronger and stronger and stronger, and the numbers will look less bad, and then maybe in the back half of 2021, they can actually get to some very nice growth year over year. And so that's gonna be a massive change for Wynn, the business model, and ultimately its stock price as things start to ease up there. So I actually think there's some opportunity in some of those players. LVS, not a bad one as well out there. So hope you guys enjoyed today's video. As always, if you don't mind, smash that thumbs up. This was a very in-depth video, and we talked about a lot of stocks. So I hope you guys got a lot of value out of it, and that definitely helps out the YouTube channel in a massive way. And if you're looking for some help out there, you want to scale your stock market portfolio to much bigger numbers, specifically if you have 5 figures plus in the market right now, or you're looking to invest 5 figures plus this year, check out first link in the description down there. Go ahead and apply, and hopefully we'll be able to get on a call with you, tell you about a product and service we have in the market to help you scale your stock market portfolio. Thank you for watching and have a great day.